a founder with an idea and someone willing to write them their first check. It's a long game. The companies we invest in today and the ones we'll be working with for the better part of a decade. So the relationship between the founder and the investor matters enormously, and that's really what today is all about. So let me introduce the panel. We've got JD here. JD Sheard is a co-founder of Eastend Ventures. Before starting the fund, he spent more than 20 years in senior roles across the energy industry in Canada, the US, the UK and Europe, and he moved to Adelaide a few years ago. I think it's nearly 5 years to the exact day now.
Pretty close.
Yeah.
We got our citizenship, what, 2 weeks ago?
Thank you for ruining my next sentence.
Oh.
He's officially one of us. Next to JD, we've got Nick. Now, unlike Gildy, who tried your last name, not doing it. He's the founder of Optible AI, an Adelaide company building artificial intelligent tools for grant makers and foundations. And then on the end, we have Greg. Greg is the co-founder and now general manager of WorkSafe Guardian, Australia's first lone worker safety app, keeping at-risk workers safe. So before we start, in plain English, fellas, do you want to explain what you actually do? We'll go with Greg first.
My role's probably changed a lot in the 10 years the business has been going. So when we started, I was probably more the product idea person. Then we bring in software developers and then you run them. And then you have to do sales because you've got to pay investors back. And then we run that. And now we exited last year to a European safety company. So now I'm doing a lot of, what would you call it, reporting, planning, reporting. Did I say that? Yeah. My role's changed a lot. So now I've gone from co-founder to general manager. It's different. Now I've got a boss from being a boss, so adjusting to that, but so far so good.
Lovely. And Nick?
Yeah, I feel like I'm seeing my future in a way. I don't like all this mention about reporting. But no, I'm a CEO and founder of Optible. We're earlier on in our journey. We're currently expanding internationally with our first customers in US, like FIFA, who are running programs through Optible. Essentially, what I'm trying to do is translate the bigger vision of what we're doing now to bring on earlier customers and get them to use this new technology. And so when we see grant makers out there, like FIFA, for example, they thought they'd get 1,000 applications. They got 3,500, and their team just could not. They just could not assess them all. They couldn't read through them all in time to do that in an equitable way. So they came to us, and now they're using our technology, which we can find on page 17 of a grant application if they're not eligible or if they're not suitable, and that really speeds up the process, makes it fairer, more equitable. And so this is what we're bringing to the world right now, and the US with the massive philanthropy industry over there is our focus, and so we're discussing this with working with the likes of Ford Foundation, Coca-Cola. We're in early discussion with Gates Foundations, a lot of these that are really excited about how do we use the latest AI technology to make giving a lot more fairer and equitable.
Awesome. Thank you. So we're going to pull back the curtain a little bit on what actually happens when an investor decides to back a founder and what founders should look for in return. An honest, practical, and hopefully interesting chat. So, JD, most people assume venture capital is about picking the next big idea, but you often say that you back people more than ideas. What does that mean in practice, and what are you looking for in a first-time founder?
Well, I think, it's kind of always a loaded question because everyone says, oh, what do you invest in? And it's like, we pretty much invest in any technologies that have that growth, but, what does it take to actually grow? And to actually grow a business, you need to have kind of that resilience and the ability to kind of think on your feet and deal with the issues. And so, all of that, what it actually takes is all about the team that's behind it. So it's everything from the founder to, the teams that they have behind them, the technical teams, the everything. And really, if they don't have that, that's really kind of, we've seen some phenomenal ideas, but then we've kind of, met them, gone, these guys will probably give me a hard time about, my interviewing process. But yes, I mean, it's really about getting to know the founders and, just making sure you aligned. I kind of jokingly say to a lot of people, it's like, I've done, 20 years in oil and gas and had all those days where you wake up in the morning and you look at your calendar and go, crap, I don't want to deal with those people. Where it's like, so for me, it's really about waking up in the morning and it's like, hey, I've got a bunch of meetings with Greg. I get to go help him. I get to go help Nick. So it's really just about making sure that they're good people and have the ability to do it.
Lovely. And walk us through the moment that you decided to back Nick and Greg. What stood out with them?
I mean, I think, for Nick, it was, kind of his resilience. I think a lot of people, he'd been on a previous journey in a previous company. We talked a lot about that when I first met him. And, that previous company wasn't as successful as he would have liked. But what he learned from it and how he was able to kind of take those lessons and apply them to what he was doing now, like you cannot beat him up enough. He just takes it and keeps going. But it's that resilience, right? It's that grit factor of, I don't care what the world throws at me, I'm going to be able to get through it. And that's pretty much, Nick to a T. And it's like, and Greg, I mean, for Greg, it was, similar thing. We got to know WorkSafe Guardian and really got to know him, both of them as people. But I mean, Greg, we really just aligned kind of on our similar backgrounds and kind of our progression through non-technical people ending up in technical roles and really just the ability to figure that out. I mean, I was always amazed at just, Greg's ability to run a technical team and to understand the technology and just his kind of generosity and willingness to kind of help people and mentor people. And so for me, it was like, I woke up in the morning and I'm just like, awesome, I get to talk to Greg today. So again, it was those feelings of, having that, gut instinct of going, these are people that I want to support, whatever they're doing.
Lovely. And what's a red flag that would make you walk away from a really strong idea?
Well, for us, there's kind of the investor-focused ones. I mean, at the end of the day, we are an investment fund, so we need to make sure that we're generating returns to our investors. I mean, it's kind of not a good thing to say on a panel, but everyone always assumes that the founders are kind of our clients. But the reality is it's our investors that are our clients and we need to generate the return. So a lot of times we'll meet people that have great ideas or things like that, and they're just not aligned with kind of our vision. It's something that, no, I'm starting this company and it's going to be my baby for the next 20 years. Well, our investors don't want to wait 20 years to get a return. So things like that. I mean, that's the big one. But then really it is just, again, I talk about this a lot about who they are as a people. That's why we tend to kind of go out and see how they interact with people, talk to the team, talk to there's a lot of people out there that frankly are just nasty people, and I'm sure they're going to have a great business, but that doesn't mean I want to be the one supporting them. So it's typically those are kind of the red flags they're mostly character-based red flags. I mean, if you've already burnt $3 million and you don't even have an MVP or anything, obviously red flag, but mostly it's a character.
Fair enough. Greg, when raising money, what were you actually looking for in an investor beyond the check?
For us, it was interesting because we were almost at the point of revenue. So we were looking at someone that had been at scale before, which JD had. He'd been part of a business that had moved from Canada to the US, grew in a similar industry, similar ideas. But again, it was more to do with the person you wanted to be in partnership with the next 5 to 10 years. You don't want to take just the money, because you don't know what strings that comes with and those sort of things. And I think if you can be open and honest and brutal with each other in the beginning, that's what you're looking for.
Beautiful. Nick, what did JD and or the team do that helped move the needle in your business in the right way?
Yeah, I think before I get to that, to add on to what you were saying as well, a lot of the times we go and we speak to investors, and I feel like a good founder can pick a good investor pretty quickly. Like you tend to have these conversations where there'll be an investor that talks to you and tries to, without knowing anything about your industry or your business, tries to pick it apart and find the holes, and then try to tell you that they're the only solution to fixing that problem. And so you can have these conversations when you think, okay, well, this doesn't sound like a great way to start the relationship. But then you have others where, like JD, for example, and the team as well, that they're bringing a lot of empathy and are more curious about it and are asking lots of questions and challenging you. And so when you're in those conversations, you can feel, okay, well, you get to a point where you're both coming up with the strategy together. And that's just a brilliant way to start this relationship. So that you can really tell by the first conversation if I think you're going to have a good start to the relationship, and if it's genuine. The other question around what have you done that's been great?
What is something that we've done since we've invested in you that's genuinely moved the needle in your business?
Yeah, okay. So there's a lot, but like JD, you've come on board as our chairman, so you're providing continual support and guidance for us as an early company, learning these processes, learning how to go from a great idea to making the customers extremely happy to then, well, how do we actually build the governance around this to grow and to be taken seriously by acquirers and larger customers internationally. So it's kind of when there's a problem, we go and try to solve it ourselves, but then there's often times where I'll be calling you, try to bounce ideas off to go, how should I think about this? And you're really great and not always just coming up with, here's what you should do, but asking the right questions for us to then, actually together come to a solution.
Lovely.
Yeah. Oh, and also, like, Sarah basically joined our ops team for about a year because we needed that, and so we to the extent that you're sharing the team with us to essentially help us grow and fill our gaps, and so that's not something that typically you would see in another VC firm.
Greg, what is something JD and or the team did during the process of us investing in you that made you think these are the right people?
I think laying it on the line straight up, like the tough conversation straight up, which is often hard to have when they're pitching to us, we're pitching to them, can we move forward in a relationship? And if you don't clear the air in the beginning and see what you're going to offer each other and start talking about what your future is, because again, an investment fund exits or sells to another fund, and that's how they make their money, that you have to have those conversations up front, because otherwise you're having arguments later on. And if you do it early and also call in the accountability early with board meetings and those things that startups are really bad at, it just makes it an easier process as you go along.
Of course. Now, Nick and Greg, I'll let you guys fight over who answers this one first. JD keeps saying founders matter more than ideas. Do you actually buy that? Do you think it's investor talk?
Does that happen at 5 o'clock on Friday nights? No, I think it's two-sided. I think if you can't get along in the beginning, don't get into bed with each other, right? It's just going to end badly. The kids get lost in the divorce and those sort of things. So, I think from that point of view, it's really important to have the personal relationship.
Yeah.
I think, particularly in early stage, it's very different to institutional. I think early stage, you've got to have a connection.
Yeah. Nick, what about for you?
No, I don't think it's just words. I think, like what I described before about how those relationships and those conversations start in early stage, you can see if there's a genuine interest and if there's a genuine way to connect. Founders like you, for instance, I've seen JD walk away from a deal that I think looked like good, but then the founder got really drunk and drove home. And it's like, okay, well, as a founder, you kind of, you're a risk taker, but you get to the point where, it's similar to a way that you see the people who are doing stunts with Red Bull, right? you think, oh my God, these people are crazy. How are they taking these risks? But for them, they do this like they're doing this every day, right? And so it's about, I think, for founders understanding the risks. But in that situation where they drove home drunk, that's not the type of I guess risk taker that you want to be working with, right?
Of course.
Yeah.
And back to JD. Founders, this one's here. Founders hear the phrase value add constantly. So in plain English, what separates an investor adding value from one that just shows up to board meetings?
I mean, I think it's the ones that actually care and aren't just filling a seat. And we always say we don't even want a board seat unless we can add value, because so if it's international expansion, if it's things like that where we can actually contribute in a meaningful way, then we're there to do it. But we're not going to fill a seat just because we're an investor and we demand a board seat, right? I want to be able to actually help, but we also want to be able to help if it's not a board seat. Like to Nick's point, Sarah's our ops person out of Queensland, and she just basically joined the team for a year to set up kind of processes and governance and stuff like that. And it's like, if we can do that, I mean, we are the type that I think our entire team would be bored if we weren't rolling up the sleeves and actually helping people. So for us, that's just a huge part of what we do.
Lovely. And now, in closing, so we will have enough time for questions. I'm very conscious of the time. So, Greg, what would you tell someone thinking about starting a company tomorrow?
Run!
Yes and no. I think the ride is awesome, but also make the tough choices because it'll make your life easier.
Beautiful. Nick, what's the best advice? Well, sorry, what is the best advice for a founder taking outside money?
Well, I mean, run isn't a bad answer.
Towards the money?
Perhaps in a different way. It's not a sprint. It's not a marathon. It's a marathon you're sprinting, in a way, right? So to keep on with the run analogy, and runway is nice too. No, I think if I look at a lot of South Australian founders, it's impossible to give good general advice, right, to people starting a company. I think it depends on definitely the individual. So this is all wrong for many different people. But I think South Australian founders in general, we're not used to having VC attention. So what we're used to doing is making things work on zero budget with just pure white knuckle energy, right? And so, so when we get investment, we're still having that mindset of you're at the end of the toothpaste tube, right? And you're finding creative ways on how to get the last bit out. So that's kind of for us how we're thinking. So when you're taking money, you need to there's a bit of coaching that happens to go. How do we think about this differently from a more value generating perspective versus how can we do as much with this little?
Nice, thank you. And lastly, JD, what makes a great founder-investor partnership? We've heard what Greg thinks. What do you think? Are you going to copy Greg's words?
It's hard not to copy the words, but it's like, but it's true. I mean, I think with these guys, the thing that made their partnership is just, both of they have a lot of similarities. To Nick's point, they're both squeezing that end of the tube, trying to make every dime work. I can't tell you how many times I got to go, will you please just spend some bloody money so you can get some help? But yeah, and I think that it's just that being upfront and being honest and open communication. I think that's, we always talk about how transparency is key in everything we do. And I think for us, the good times, the bad times, you just got to be open and honest with people. I always tell people I want you to be the first to me with bad news because then I can actually help you, right? Like, don't wait till it's circled around the block and now I'm hearing through the grapevine. It's like, if something's going wrong, come to me, let's talk it out, let's figure it out, let's find a solution. And I think they were both phenomenal at doing that. And I think we've always been able to have great communication. And half the time it's, okay, I'll meet you at the pub at 5, but it works.
Thank you. Now we've got time for questions.
Yeah.
Thanks very much. Great introduction to both of you. Pitching. So both of you have had a successful pitch, one in terms of an actual sale of the business and one to a major client. What was that kind of turning point, if you could name one thing of that actual pitch that you thought actually made the difference between winning or losing? Having pitched so many times to so many companies, what was that one thing that you
You're
had?
showing me up, Mark.
I can say definitely for myself is you get to a point where you don't overdo it and you become more sincere, and that transfers in conversation. And I think the moment you get to that level of sincerity, people buy that.
Yeah, I think getting to that point is an interesting one. Getting to the point where you don't overdo it usually involves you learning so much about the customer that you can just embody what they think to that point where you know exactly the right words in a concise way to know how to present it. You know, when even with our two major customer bases is big foundations in philanthropy and government, right? And these are two very different ways of communicating, very different problems, very different team members and structures and all these things. And really to do a good pitch requires you being obsessed and understanding that until you're basically almost part of their team. So,
So it was already mentioned that you have investors into the investor, so that a VC fund actually has investors as well. To the founders, did it matter to you who these investors were, like how the money was actually raised that was then invested into your company?
For you guys, me. I mean, for us, I mean, we're Victoria. I mean, we're out there trying to raise money. We raise fairly large funds, $30-50 million for a fund. But the reality is, we still say no to investors because there's a lot of people out there that we kind of have a list in our system that says do not promote, and we kind of put them aside, and that's because they don't align ethically, or there's issues there, or just like when we're looking for founders, we want to look for investors, and we've had people that have offered us very sizable checks, but the reality is, I mean, when we're doing our investor meetups, kind of like this, where we bring everyone into a room and do meetings, there's some people that I know if they were in the room, they'd feel uncomfortable because of ethical or behavioral type things. So there's actually quite a few investors that we've had to say no to simply because they don't align with our values.
Another one.
Excuse me. With the market today, I find in dealing with people around Australia that they're finding it so difficult to make profits, and that what is happening with the government is they're not allowing small companies to grow, which is the backbone of any country. Do you have any comments on that?
That seems like a new one.
Yeah. I think if you can make a business work in South Australia, you can do it anywhere. And we are up against it here from, previous governments. Weren't always easy to get along with either. I think the current one is better at communicating and hearing your problems that you've had previously and trying to get around it. But it is tough. It is tough, but I think it's easier potentially when you're in the software world because you can go and look for other markets outside of this country, which is what you have to do at times. That has its own challenges, but it seems to be there's also some federal government safety nets in place to help that happen. If you had a commodity in Australia, I think you'd be really up against it, particularly dealing with exporting to different markets, the cost of imports coming in and those sort of things. Generally though, East Coast, much easier to do with government over there. Like I would say 30% of our revenue base is from the East Coast, and they just know how to do deals. They're professional. If you show up professional and you show up, you know what you're talking about, they will engage with you every time. They don't care where you come from. But yes, I can understand how a lot of people are having troubles.
This one's for JD and Gina. How many people do you invest in compared to how many people you reject?
Can that be your response?
Okay, that chuckle pretty much answers it. We see a lot of companies.
Yeah.
Yeah, I mean,
We did stats, and I think it was in the last 6 months or something, it was 500 or so pitch decks came across our desks. We're now at 7 companies we've invested in. Yeah. So that was just 506 months. We've been doing this for 18 months now. Yeah. So,
and that's the reality of it. And it's
minute.
Not all of them are bad, though. I mean, that sounds like a bad number, but some of them are different stage, different mandate. They're too early, and a lot of times we'll connect them with people like, hey, we're not the right investor for you, but hey, here's someone else. And so we try to be those connectors for as many of those as possible as we can. Because a lot of them, it's just because it's not a right fit doesn't mean a no. And sometimes it's a not yet, or a not now, or a, hey, let's address these few problems and then come and invest. There's been some that, we've kind of helped build them up, and now they've gone on, a few companies that I helped when I first moved here have gone on to raise money from Blackbird and things like that, and we didn't invest in them. But they just weren't the right fit for us, so.
We've also got a very tight mandate because of our ESV CLP structure, which in layman's terms means we're capital gains free. So because of that federal regulation, there's a lot of companies that we like, but they don't fall into the category that we're federally stamped with, so we can't invest in them then that way either.
JD, I understand from background that the South Australian government has had, at times, quite a lot of money to put into venture capital. My question is, if they contracted you to put it out there, would they be successful? Because I remember being at a meeting where I asked a question of the person in charge of the venture capital, how much have you distributed? And I think you would probably know the answer was nil.
Yeah.
That's, if you want to know why, I mean, that's one of the catalysts of why we exist, is because, I drank the Kool-Aid. I'm fully South Australian. I'm not going anywhere. And one of the biggest things I saw was so much potential here, but no access to capital. And that fund, not naming names, but used to just make my blood boil, because I used to see so many great people trying to get money out of them. And basically their mandate was, unless an East Coast VC invests alongside them, we're not giving you any money. So basically the state government decision for whether to invest was based on a Sydney-based investment committee. So they didn't care. I mean, I think I can say that safely in this room. And they announced last year that they were going to do another $50 million into another fund. And I think no one's seen a dime of that yet. It's still sitting there in the ether. And, my concern with that is that they're going to try and do it themselves. And, because there's been talks in Treasury that they're going to basically do it themselves and invest out of their own thing. And so that scares me just as much. So I think there needs to be a reality check with that government as far as, deploying money and where it needs to go and how. And we really hope that that happens. And, full disclosure, I mean, we threw in a tender to them and said, hey, let us help you with this, because I think we have the track record here and the reputation and the ability where you don't. So if this is something you actually want to create innovation, then let us help you. And, we've gotten a lot of traction. There'll be some announcements coming up in the next few months. So I think we're one of the first fund ones that will be able to announce that we've got actually super fund money. So that's unheard of. And that's because of our standards and our governance and how we do. So there's no reason why, we couldn't do something in the government. And I would absolutely love to do that, because that would give us a bigger pool to help these early stage companies. And at the end of the day, that's the whole reason why we started this company.
Yeah, I'm sorry we got one.
Thank you all very much. That was really interesting. It's a very general question, but it's just in relation to artificial intelligence and AI and disruption. When you're doing your business model evaluations and assessing risks, I mean, clearly there are some industries where AI will decimate the service provision, Zillow in the US or whatever it might be, where platforms will be simply overrun. So it's kind of a broad question, which is, how do you account for disruptive risks in the evaluation of business models that don't exist at the time you're evaluating them.
That's the how long is a piece of string and where's that magic 8-ball thing? I need to get that thing going again. But the reality is, we look for kind of two things. We've touched on a lot the founders today, and I think that is a huge moat that gets, that doesn't get enough value, because anybody these days can go with AI. They can create a product in a weekend some of these times, but if you don't know how to execute and don't have that ability, then it's still just a product that's going to sit and go nowhere. The other thing is looking for those products that have some kind of defensibility. And typically for us is, first we talked about the people, and second is typically kind of either some kind of data or experience moat. So data is, nowadays, like with AI, you need massive amounts of data to train it on whatever you're doing. So if you have kind of a unique data set that would be challenging for other people to obtain, then that's a huge driving factor on the AI decision making and kind of what that business model looks like in the future. Or if you have kind of a lot of experience, some of our other ones, you look at Greg and Nick and most of our other companies, they all come from industries or areas where they were in for 20 years and they had a problem that was really irritating them and they knew it so intimately that they went out to solve it. Even if you get someone else replicate their product, they don't know how to sell it or service the customers like they do. So that's kind of the other kind of moat that kind of defenses against the AI uncertainty, at least from our playbook at this point.
That's all, guys. Thank you.
Thanks, guys, for coming, and I appreciate you guys doing this.
As a thank you from Rotary, you get a bottle of wine. You get a bottle of wine. It's their special 101 wine. It's a limited edition. Did I do it good enough?